Welcome back, folks. Dow's up 149, S&P is up 14. I wasn't paying attention to the clock, so we really went right into that break. But just before we were doing that, we were taking a look at, we took a look at the DAX. We took a look at today's candle session. We'll see, really across the board, markets across the world doing similar type of things. Big moves, big strong moves to the upside out there. Some of it may be a little bit of catch up from our markets yesterday, as well as, whatever numbers came out of China, whether you believe them or you don't, doesn't really matter out here. But if we just simply take a look at candle formations, in this case here, we can see the Dow, has traded right from the get-go, right off of the bottom. You take a look at that candle, and more often than not says that the Dow is going to finish up at its session highs. That would meaning that even though you and I have taken a look at these potential patterns here that have called other significant market tops and bottoms, changes in trend inside the marketplace, it's not likely that that's going to occur between 1:31 right now where we're at and 4 p.m. That can certainly do that overnight or early tomorrow morning, but it's not likely. Just simply candle formation works this way to the upside, this way to the downside, really is helpful for folks that are doing intraday trading as well. I've got signals on an intraday basis. The same pattern we were looking at on the daily, on the 30-minute chart out here. It exists on the 10-minute chart. Here's a 10-minute chart for the ES Mini. Price moving higher into the 11:40 a.m. time frame. We got a nice little bearish reversal signal. Shows up here at 11:50. A little doji the next candle session, so it didn't degrade what occurred there. You can see we had a market profile, brand new one that formed here at 12 noon. We can see that price has pulled back where it should be, which is the level where both buyers and sellers are most comfortable with. That was 2,068. There's a little point of control out here. Real support inside the ES Mini on a 10-minute basis down at 2,065. 2065 out here. This market profile, we can see that point of control closer to the bottom of the box. So it's really the buyers that are in control of the market. So even though we've got this reversal pattern, we've seen a bit of a move lower, from 2073 to 2068. So you got about a 5-point move out there. And it's found support and is now beginning to move higher. Will not surprise me at all to see price get back to the 2073-ish level. And that's the way that it looks right now inside of the ES Mini. Now, sellers ought to be right at about 2073 on an intraday chart, selling away out there, and we'll see if that in fact happens. So we may have seen, in essence, the highs of the day, and the market doesn't do too much more, but the likelihood of it selling off from here forward, pretty small chance of that occurring out here. So that's the overall markets, I think, what it is that I see out here that you should be keeping your eyes on as well. So let's go ahead and move over into other instruments. Well, I mentioned, let's take a look at some of the mining equities out here. Let's go see what they're doing today. Let's take a look at Rand Gold Resources. GOLD is the ticker symbol. We can go ahead and turn our market profiles back on. Yesterday, gets up, makes a little doji out there. Maybe doji's up at resistance. I don't know if this is up at any kind of resistance level here inside of the market. None that I see real quickly, but I'm sure we might be able to find it. Nonetheless, you've got the leaves that are falling off of the tree today. So you got a bearish reversal signal. 446,000 shares today to the downside. Let me turn those profiles back on. Give me a moment to do that. There we go. And so first place for price to come down and test support is going to be at 94.77. That's the top of that weekly box out here. What's it going against? Well, there was a swing point from March 17th at 1.5 million shares out here. It's trading into that as we speak right now. So in essence, it's getting back into this lower part of this range out here, this little consolidation, which in essence says that if we see a close inside Rand Gold below 94.77, the next run ought to be down to 91.70. You get below there, you're looking at 88.07. May not be anything wrong, just may be a high level consolidation pattern. If we go take a look at Uno more, por favor, Agnico Eagle, AEM. Let's go see what this is doing out here today. Yesterday, ran it up with about 2.6 million shares today. Lighter volume on the pullback, 1.1 million shares, not inside any range or anything that I can see out here. So AEM looks a little bit better than Rand Gold Resources. If we go take a look at currency pairs out here, you've got the U.S. dollar index trading to the upside. Why? Well, if you take a look at the euro versus the U.S. dollar, we can see this thing is pulling back out here. Let's take a look at this. Let's get rid of those A to B equals CD patterns. Let's also get rid of those profiles out here. Let me go ahead and clean this up. Now, one of the things that we can notice out here, right, I just talked about a little doji candle and how up at resistance levels it provides us with a ton of information. As we take a look at the euro versus the U.S. dollar, you can see a series of doji / high wave candles. They really both have the same meaning, so to speak. The high wave more so that it has lost its way. You don't really necessarily use that at resistance. The doji, a whole different thing. What's a difference? Well, it's really the size of the body of the candle out here. If we take a look at the trading session of yesterday, April 11th, inside of the euro, the open was 114.05. The close was 114.045. That is a doji. This one is not. The trading session here from April the 6th. Many might call it a doji, but it's got too wide of a body of a candle out there. And nonetheless, it's one of those candlesticks that say, hey, I've lost my way. Lost your way? Which way? I've lost my way on the way up. So you've had a series of these candlesticks out here that have said, I'm not buying it here just yet. I don't know what happened to yesterday's candle. I probably have to restart the system, and I don't want to do that in the next 2 minutes out here. Nonetheless, you are seeing price pull back. Where is price going to pull back to inside of the euro versus the U.S. dollar? I don't know. One of the patterns that sticks out visually to me as we take a look at it is probably this little rising price channel out here. I'm just looking to connect the dots, see if I can get, 3 or more co-located opens and closes. Probably that is the better portion of the channel. Yeah, that's clearly your channel line out here. We can see price broke through that level as a breakup back on February 9th, but then looks like, hey, price is going to go ahead and pull back to the bottom of that channel. If it doesn't pull back to the bottom of the channel, it'll do some type of retracement. That first retracement level is going to be 121. 1.212 out there, but more likely the 0.618 is where it's headed to. That'll get you back into the bottom of that rising price channel in the 110.6 level. Let's go to Fort Collins, Colorado, and speak with Mark. Mark, thanks for calling. Thanks for holding. How are you this morning?
Good. How are you?
I'm doing well. Thanks so much. And IBB, the biotech sector for the NASDAQ, is what you want to take a look at. Tell us what you've been doing and how we can help you.
Well, I'm long. It looks to me like, and a lot of it's because of the way it tested the big up candle from the 6th yesterday, came down to the bottom of that, tested on lighter volume, closed back inside it. Looks like it wants to do a leg B up here, or at least finish doing one. And then I'm wondering, because of that, if that does finish itself up and gets back above 287.77 to complete that, the market, I would think at least the NASDAQ may run until that's done. What do you think?
Well, so let's try to take that one step at a time here. Let's first take a look at the candle that you referred to inside the NASDAQ. And Mark, can you hold on through the break here?
Yeah. Fine.
Okay, so we'll go back out to Mark in Fort Collins, Colorado. We're going to look at the IBB. We're going to answer all of his questions as best we can. The first thing we're going to look at is that candle that had nice high volume on April 6th. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. NASDAQ's up about 52 points right now. We're on the line with Mark in Fort Collins. We're taking a look at the IBB, which is the biotech sector inside of the NASDAQ. And Mark's question is, is this likely to go make a higher high, get above the trading session from April 7th? And at this stage of the game, I say just with regard to that question, odds would favor that is a likely result. And I would just say simply because, and I think this is what you said, Mark, was you're taking a look at that candle session on April 6th, where the IBB moved up with 5.9 million shares. And that little breakout candle, wide price spread, accelerated volume, was tested yesterday with 2.1 million shares and rejected. There's no bearish reversal signals or candles or anything inside here. And if anything, the type of candlestick that this could form is what's called a rising three. And that's if within about the next couple of sessions, it's a continuation candle. And at any time that this were to close or trade above 285.80, that would say you move, to the next level. Does it only go ahead and make a fourth wave count out there? That you and I, we really don't know, because if it gets some volume going out here above that April 7th high, that would form, another A to B equals CD pattern to the upside out there. And that's got 4 million shares. So, it may go even beyond a fourth wave out there. That's how I'm seeing it at this stage. If I turn on our market profiles and I go ahead and get rid of those horizontal lines, what this is saying as far as price targets, it really would say to me, if in the next couple of days the IBB is able to get above that high of April 7th and then close above 268.60, which is the top of its daily box mark, then I would say its price projection is more likely than not the 302.33 area. What wave count it might be in, I don't know. But I would say from a price projection standpoint, that would make sense as far as looking at different levels of potential resistance out here. As far as will it do that before, I think maybe was one of the premises that before the NASDAQ index itself would make a top, that the IBB has to complete its pattern. Is that what I was also hearing?
I think, typically when the IBB is strong, it helps at least the Qs, and I'm wondering if the Qs can fall apart until the IBB is done with this run. So that's kind of just my thought process there.
Inside of what I don't know is I don't know the weighting of the IBB inside the NASDAQ. I don't know. I mean, I know there's like 190 issues that are traded for the most part with inside the IBB that make up that actual ETF. I don't know how many of those issues are actually in the NDX 100. I know that the top 5 holdings, which represent a bulk of the percentage weighting inside the NDX 100, you get a Facebook, Google, Amazon, Apple, Microsoft. I think those might be the top 5 or pretty close to it. What's holding the NDX 100 back, if I can find my page out here, is at least Apple has been trading inside this descending price channel. Let's go see if it's taken it out. Yeah, it's actually taken it out today. So that's kind of interesting. If I go ahead and take a look at this chart, give me a second here just to clean it up just a tad. We're going to turn off those profiles. So what we can see, this descending price channel that I have out here, it's really, if I put up the monthly chart, you'll see why I've selected those lines, but they actually work really well for the daily. So Apple's actually broken up above that little rising price channel. If we take a look at volumes today, Mark, it's done 20 million shares going into its most recent swing point that has 37 million shares. Straight line math says it's probably just a little bit short of that. Doesn't mean that it can't go higher. This would say, though, that what Apple's also doing, if I go ahead and get rid of that channel line, we can see that today Apple is closing above its daily market profile. This says that Apple could actually make a run for 119.86. So if you add that to the piece of the puzzle, that might say that the IBB could make a run for that higher level,
Okay.
And that's the way it looks right now. We still just absolutely need to be aware of those other patterns on the daily indices, that we're taking a look at. A price moves higher, does on less relative strength out there. It's present inside the NDX 100. It's present inside of the NASDAQ composite, as well as the majority of the indices. It's not present in the New York Stock Exchange. And if we see the cavalry arrive and the bears show up, then we'll know what the likely message is. But at this stage here, and I'll give you one other element to throw out there. The analog pattern, Mark, that the markets seem to be following right now, they're not following the presidential election year. They're not following a second-term president. They are following the cycle of just simply the annual analog pattern over the last 84 years. And that says that the market can go up into the end of April. Maybe not even make a top until about May 16th.
Okay.
So that's all I've got for you.
Okay, well, thanks for the analysis. Appreciate it.
Hey, you bet. Thanks so much for calling. That was Mark in Fort Collins. I was taking a look at IBB out there. Again, I will give priority to the patterns that we began the show with. But again, until we get confirming signals, there are only potential patterns out there. Everything else here is pointing to higher prices. So thanks for that call, Mark. Let's take a look at Baidu. I have not looked at that stock. I don't recall looking at that stock for a while. Today it's trading up with about 2.2 million shares, nearly 4%, 3.7% out here. This is taking out its most recent swing point, trading above its daily market profile. So that looks pretty bullish out here. The swing point that it's dealing with is March 31st. March 31st, the high out there was 193.73. Volume on that trading session was 2.2 million shares, and you are already up above that with 2.3 million shares. So this has got, in essence, a confirming A to B equals CD. That, good Lord, who knows where that's going to take us to. There are several A to B equals CD patterns out here. It seems more likely than not what it's really trying to do is get back to the swing point high from November 30th. That has 26 million shares. That is a high volume, untested high out there. So Baidu could very well be on its way into the price range of about 202.55 to 217.97. It's trading right now at 192.42. Had a request to go take a look at the yen. So as I mentioned, we were taking a look at the euro. We looked at the euro. It's getting weaker. U.S. dollar index is getting stronger. If I go ahead and take a look at the Japanese yen, it too is getting stronger out here. If we look for what is this thing doing, this currency pair doing, it's more than just a thing. Let's go turn off these profiles. I don't know what else I've got on the screen. Why do I have that 108.10 level Must be a daily, a weekly swing point out there. I bet you that's what it is. Let me put this up on my chart out here. Is it a weekly? Probably the monthly. It's the monthly swing point. So I'm going to guess it's the monthly swing point. Instead of guessing, let's go confirm out here. No, it's really not the monthly swing point. So I don't know what it is. I'm going to go ahead and just simply get rid of those lines. So here's what we know about these. So the nice thing is, here's what we know about the Japanese yen. Plus, it's good to go ahead and take a little loftier view of it by going and looking at the longer-term time frame. That's the monthly. So we get back from this break. Let's go finish taking a look at the Japanese yen, which thus far has only made a 0.382 retracement of its huge move off of the bottom for back in 2012 to the high that it formed back in 2015. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 158, S&P is up 15. Let's go to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How you doing this afternoon?
Doing great, Steve. It's nice to talk to you again.
Nice to speak to you as well. You looks like you're in a nice trade here, assuming that you're in it. Ocean Rig, UDW, ORIG is a ticker symbol. Are you in that trade?
Yeah, actually, I traded it on that previous move off the bottom.
Okay.
And I sold out because it made such a crazy move up, and I took profits, and then I bought back into that retracement.
Yes.
So I'm in at 8,000 shares at 77 cents is my buy-in.
Man, that's a nice
And then
trade.
I wanted to, I saw that it kind of came off that retracement, made a little pennant, and then we broke above that yesterday with some volume. And I just wanted to get your thoughts on. My intention was to be honest with you, was kind of ride this thing till Friday before that news came out over the weekend with the whole OPEC meeting. And I'm moving my stop up, but I just wanted your thoughts on the chart itself.
It's a very good looking chart, and congratulations on this trade out here. I mean, you timed it really well. Certainly the first time around, but really the second time around, because it is a textbook buying an equity as it comes back to a breakout area. Now, most people might look at the breakout area as the trading session from March the 4th out there. It is nice, especially when you're so close to a swing point, to take a look at what's going on. And that's, folks, the February 24th level, 1.2 million shares. And when price came back and tested it, it was with similar type volume. March 31st, though, 724,000 shares out there, 818 on April 4th. So you can see that it just didn't have the volume to go bust out the bottoms. If anything, it was just testing that low on light volume. So excellent trade there. Now, yesterday was a nice move. Obviously, we saw a nice move in light sweet crude. So I completely understand your thoughts about maybe riding it in through Friday. What it's doing today, it's testing, as you know, that swing point for March 7th. It's got 7 million shares. So it's doing it with lighter volume, even lighter volume than yesterday out here. You'd sure like to see this close inside $1.34. Its high today so far has been $1.35. But even if it closes under $1.34, I don't really think that you've got theoretically, you've got a rejection of a swing point on price and volume. But I think with yesterday's, move out there, I wouldn't see any reason to get out of it. Our TAS market profiles, Brent, they say that at 148, 149, you could run into some serious agitation. You clear that level, and then, maybe what it's going to do is going to take out this entire pattern and get above that March 7th level. But it says at this stage, what we know, you're coming into a swing point level, you're doing with lighter volume. The market profiles say you've got resistance at the 148 area there. I think what this is doing is confirming your inclination as to what you should do. I don't see anything different there. And that's looking at the daily charts. Did I miss anything or something else maybe that that you're checking out? But nice trade, really nice trade.
It sounds like you're kind of reaffirming what was, instinctually it seemed like the correct thing to do. So I just the other side is, because you're in so nicely on this trade out here, is you could put your sell target in place. If it breaks above, the session from March 7th, you could step right back into it. You will not have lost out a ton. You're probably talking about 10, 15 cents or something like that. So nice trade out there. Thanks so much. Next time, though, call in when you're taking that trade. All right, have a great day, Steve.
All righty, you too. Hey, folks, stay tuned. Our man, the polar bear, David White, is going to be up next. Tom O'Brien from 3 to 5. Have a great Wednesday. We'll see you on Terrific Thursday. Take care.
TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now.
You're watching Tiger TV.